So looking at gold on the monthly time frame, we're going to break it down and how we're going to trade this month. But if you've come here to our Throne YouTube trades, you realize the last trade where we were looking for selling opportunities, and then unfortunately the market gave us a new structure where we had to change from bearish to bullish, and because of that we were able to get this buy position that we are holding now, and we've taken some partial profits, and then the rest is just going to run for swings. And I'm going to break down where we got the buy from. So the first thing you need to do here is that we wanted the monthly candle to close so that we can have a better picture of how the monthly candle has closed. So if you look at the monthly candle now, the market is of course bullish. Why do we say the market is bullish? Because we can clearly tell here that we only have one bearish candle with a wick. So this candle has a wick all the way here. Now, whether this wick will be filled or it will not be filled is a question that we will have to answer depending on how price is going to form on the lower time frames. So once we mark that wick, and then we can mark these as our all-time highs. So now we are trading in between here. This is where we're going to look for trades, whether they're going to be buying trades on the lower time frame or sells. But for now, there is no much information you can actually do from here after marking your lowest point of the market and then your highest point of the market. And then if you're still, you can also mark your highest monthly candle. So we want to trade around here. Now, for you to be able to trade around here, you must know what is happening here. You already know this is a week, and there are usually higher chances for the weeks to be filled when the trend changes. So we now come to the next available time frame, which is the next lowest time frame. Now, that is the weekly time frame. Now, I cannot consider this as a weekly candle closure yet because we have about 2 trading days for this candle to close. So that means I cannot rely so much on it. However, I can mark these as a previous weekly high, which the market has also broken above. Okay, this is an indication of a bullish trend when the market breaks a previous high, meaning the market is forming higher highs. So once you have this, then you can look on your left here, you see where did the market also break off from. If you look at this candle here, created a difference between these highs and then this new lower low here. So we can rely on this candle to mark it like that. So that is a potential resistance area. This is where the market change course from. It broke. Instead of continuing upward, it broke below, giving you that new price. So with that being said now, you know we are now trading around here. You've narrowed your trading from the whole of this now into this here. Like we said, we cannot rely on this as a weekly candle closure. We have about 2 days. So for you to be able to understand price better now, you can come to the next available time frame, which will be the daily time frame. And on the daily time frame, what do you see? You can clearly tell here that the market has broken above these previous highs, which were our weekly highs. So indicating to you that market has failed to come below at these lows here. Instead of continuing below this, it has come to break up. It has broken above these highs here, an indication that the market is planning to go further up. So if you're to trade now on the daily time frame, what you need to first observe here, if you look left, you realize that this was a previous daily high. So you can mark that. That is also your next potential resistance. And then there is also another previous daily highs here. Now, once you have these are areas in which the market is going to react from. There is no reason for you to begin to look for buys or sells around here until the trend changes on the lower time frame. So once you have this, you can now know that this is the best place to look for trades when the market pulls back into this area and then pulls back into this area and then begin to form a trend that will break above. So these are the good areas to look for trades. So this area, and then here how the market is actually going to change, either to bearish or continue bullish. You can look for trades above this or below this when there is a change of trend. And then these are areas market is going to react. So once you have this, you know you're not trading every day until the market reaches one of these areas and gives you a structural change. So now from here, we can come to the next available time frame, which will be the 4-hourly. So on the 4-hourly, you want to also observe trades. You want to observe how the market is behaving. Now, we cannot just be here without explaining our buy entry. So we had our buys, which we are holding now from here. Let me get you the price. So this is from the Throne Telegram group. So the buy position was from 45. We had two positions, 45, 76, 45, 76. So why did we have a trade around 45, 76 as a buy? So 45, 76 around there. Why did we have those buys around there? So let me explain that on the lower time frame so that we can know why we had to get that buy when we were thinking that the market was bearish. So on the, you can clearly tell here where price is. That is all you need. And then maybe these are the next areas in which the market is going to react. So when we come to the 1 hourly, I want to explain to you our buy positions that we're in. So we had these areas. Once the market did this, you can clearly tell here the structure was forming. So we had this as a low, and then the market, we had a lower low, and then instead of the market forming further lows, it was forming a lower high, and then breaking these highs, and then coming down, forming another higher high, and then this low here, which doesn't reach this low. So once we had this, and then we had a break, market broke this structure here, and then it doesn't reach these lows and then forms here. So this is why we had these buys. We had the buys special around here because now we're seeing a scenario where the market is failing to break the lows, but constantly breaking the highs. And that is where we had the buys. So right now, what is price actually trying to tell you for you to want to trade? Right now, the market is very bullish. There is no reason to think of sells unless we break below this. So the moment we've broken below this lower high, it will be an indication that the market, if it breaks this, then maybe it can continue to come into this area. And that is the area in which we are looking for buying opportunities and not just entering until maybe market does this. Market gives you a structure and then breaks, then we can buy. So right now we are all bullish. And the reason why we are bullish is because you can clearly see here the market is not breaking the lows, it's continuing breaking the highs. So I will not want to have trade entries above this until maybe I see a strong support being formed around here, and then maybe I can have entries. So talking of that, remember this area that we marked on the weekly. Remember, you don't need to forget this where the market broke off from, because this is where the market changed to bearish, this one here. If you study this pattern here, this is a head and shoulders. So we have our head here, left, and then the right, and then the break of the neckline, which is here. Very important area. This is an area of change. This is where the market changed from. So meaning if the market comes back into this area here, and then we have that trend change, market beginning to break the lows, then we can have that bearish movement, the downside. But right now we are bullish. There is no reason to be able to look for sells unless the market begins to form lower lows. But then otherwise, all we have to do wait for market to reverse to that area in which it turned from. Okay, so understand this structure where market turned from, change complete. When it reverses there would be a chance for price to be able to move. So this is what we're going to be looking out through the next remaining 2 trading days and then into next week. We'll just be monitoring what price will give us, and that is what we will take. We don't want to force moves. We don't want to enter because of FOMO, fear of missing out, or even fundamentals and stuff. Take trades that you can know. You take a trade that you know you can take again and again and again. So let's see how gold is going to play out, but that is it.